Hi friends, no matter when you're watching this video is an important video from a learning perspective because in this video I'm going to break down the FMCG sector and what is happening right now. So currently there is a massive correction in the FMCG sector right now. A lot of FMCG companies are under pressure right now. Now if you already hold FMCG companies in your portfolio and if you're worried that what is going on in the FMCG sector, this video will help you understand a lot. Also, if you're an opportunistic investor trying to build positions in the FMCG sector for your future portfolio growth, then this video will help you understand a lot about the FMCG sector. So I'm going to briefly cover 3 points here. Number one is what is causing the fall in the FMCG companies right now. Point number two is that is this fall more a seasonal or a cyclic fall rather than a structural fall? And point number three is then what is the outlook of the FMCG sector in my view. If you don't know me, my name is Rahul Jain. I'm a full-time investor and a full-time content creator. With that, let's get this video started. Now let me first paint the broader picture of the FMCG space. So have a look at my screen and you will see Nifty FMCG index and its journey in the last 8 years. Two very important key takeaways we are going to draw from this journey. So point number one is that pre-COVID, if you see from 2016 to 2020, this index has grown by almost 63%. And post-COVID, if we see from 2020, I have removed the impact of the COVID here. So I have not considered this decline here in terms of the COVID impact. But if you see, the index has grown by almost 87% in the last 4 years post-COVID. So that has been the growth post-COVID. So the post-COVID growth has been much better than the pre-COVID, primarily because India is a growing population. And when the population of a country is growing, the consumption is also likely to grow. In fact, FMCG sector is a consumption-driven sector. People like you and me always are looking to buy soaps, teas, biscuits and whatnot. That is why primarily FMCG sector is considered one of the safest havens and is called a defensive sector. But overall, the first key takeaway here is that it has been in uptrend. The sector has been in uptrend. It's not a dying sector at all. Overall, as you can see in the last 8 years, the growth of this sector has been there and it has been in the uptrend. Now, the second even more important point that we need to understand is that although the sector has been in uptrend, but you will note here the blips in the journey. For example, in October 2016, you will see a fall in the index. Again, here you will see that in October 2018, there was another sharp fall, then sideways movement. And then of course, the COVID crash came here. But more importantly, again, in December 2021, the index fell very sharply. But then again, it rose back up. And finally here in April 2024, you see there was a pressure on this index. So my point here is very simple, that throughout this journey, there has been blips. Whenever there are a few factors that I'll speak about in a minute plays out, the index falls. And what happens typically is that investors who are sitting at profit, they book their profits, exit the index or the sector or the individual stocks, while there are investors who are sitting on the sidelines. They find the valuations attractive, they take fresh entries, and then index gets stabilized, moves sideways or might go back up as the buying happens. So if I were to summarize the last 2-3 minutes of commentary, it is very simple, that the index has been in uptrend, the sector has been in uptrend, but there has been opportunities along the way where the index comes under pressure, and that is where a lot of buying and selling happens in this space. If you like this analysis, request you to hit the like button and let me know in the comments a simple thank you. It motivates me to bring such content for you at zero cost. Also, if you want to practically learn things like these, then you can consider joining my YouTube member community. You are going to learn a lot and you are going to make better investing decisions. The feedback of this community has been excellent. You can go to my channel, press on the join button, or you will find the link in the description or in the pinned comments. Now let me help you understand what is going on right now. So have a look at my screen and you will see I have got 12 listed companies. Again, these are not the recommendations, these are not buy sell recommendations, but by looking at their quarterly sales data, EBITDA, etc., we are trying to draw some patterns here that you are going to love. So first point here is that these 12 companies, I have arranged them in the order of market cap. So for example, ITC 5,81,000 crores of market cap, followed by HUL and Varun Beverages and so on and so forth. First point that we need to look at is what is the demand for FMCG products right now. So for that, have a look at the quarter-on-quarter sales, which is Q1 of FY25 and Q2 of FY25. What is the growth we have seen sequentially? And very quickly you will note the growth has not been very good at all. For example, Varun Beverages down by almost 32% from sales perspective. Tata Consumer down by 3.2%. Dabur 9.6% down. Radico Khaitan 8.4% down. So you see majority of these companies have fallen down, and big companies like HUL level has only managed to clock 1.4% growth. Very, very low single digit growth. Yes, ITC 11.2% growth. But to be honest, ITC is not pure play FMCG company. They also have hotel business and things like that. If you look at only Godrej Consumer, that has managed to generate double-digit growth in Q2 2025 from a sales perspective. However, if you compare the year-on-year sales data, which is Q2 of FY24 and Q2 of FY25, you will note that there has been a better recovery, because please remember FY24 was even a worse year for FMCG companies, and in the last 2 to 3 quarters FMCG companies started to recover from that, and that's why you see year-on-year number is far better than quarter-on-quarter number, but overall still the growth is on low single digits. So for example, Hindustan Unilever, again from a year-on-year perspective, 1.9% growth. Varun Beverages, yes, 25%. It's a high growth company, right? But overall, if you see low single digit growth, what does it tell you? This tells you that the demand right now is weaker. What demand I'm talking about? I'm talking about urban as well as rural demand. But have a look at this data, you will see the rural growth has been around 6%, while urban growth is where the problem is, 2.8% growth only. And please remember, FMCG sector, 65% of the sales come from the urban, while 35% comes from the rural. So a lot depend on the urban sector. And why the urban demand is low? Because of high inflation that we have seen in Q2 of FY 2025. This is going to last longer? I don't think so. This is a very, very seasonal in nature in my view. I don't think this is going to stick for 6 to 8 quarters sort of a time horizon. Now coming to the second even more important point, which is the EBITDA numbers. Again, if you see here from a quarterly perspective, the EBITDA margins have been really, really low here. It has seen degrowth in a lot of these companies here. So for example, United Spirits 29.6% down, Tata Consumer 6.2% down, Dabur 15.7% down. So there has been a massive decline in the EBITDA from a quarterly perspective, from a sequence perspective, but also year on year basis. Again, if you see, the story is not very, very good. So why the EBITDA is down? When the raw material cost for the FMCG companies go up, they have two choices: either to absorb this raw material cost within their P&L, or they pass it on to consumer, or a mix of both of these. But right now what is happening is the raw material cost for FMCG companies have grown up. For example, crude oil gone up by 10%, palm oil 10%, sugar 20%, bulk tea 25%, wheat flour 35%. So we are living in a high inflation sort of a dynamics right now. That is why the raw material cost is also high, impacting the margins of these companies, and therefore their profits are also down. So overall, if you ask me, the demand is down and also the raw material cost is also up, causing a double whammy into the FMCG companies. That's why the FMCG stocks are coming under pressure. But to be honest, to me, it is very seasonal or cyclic, because inflation is a cyclic phenomena, right? Demand is a cyclic phenomena. It is seasonal. When the inflation comes down, the demand is likely to go up. So in my view, this is a very, very seasonal or a cyclic impact. It is not a structural problem that I see in FMCG sector. In fact, let me now move to the third segment of this video, which is what is the long-term prospect or the outlook of these FMCG sector is what I'm going to discuss now. Now, if I speak about the outlook of FMCG sector, have a look at my screen. You will see very, very important data point here. So FMCG sector in India as of 2023 was around $167 billion, and it is likely to grow at 27.9% CAGR by 2027, taking it to $615 billion. Now, 27% of growth in the 4 years of time, to be honest, looks very, very high, looks very, very ambitious to me. So if I put a safety margin here, let's say that it does not grow by 27%, let's say it grows only by 15%, putting a 12% of safety margin. Still, this is a very, very good growth rate if this sector can grow at around 15% CAGR in my view. But the question comes, why would it grow even at 15% CAGR basis? Well, it can grow because of, if you look at the number of households in India, so in 2005 we had 219 millions, in 2018 we had 293 million households, and in 2030 estimated number is 386 million household. So naturally, when India's population is growing, the consumption is likely to grow, and therefore the earnings of FMCG companies is likely to grow. Point number 2, which is even more important, is the annual income per household. So what we see here is the trend has been that people who have been earning less than $4,000 per year as the annual household income, that band has been shrinking. So from 2005, if you see, that band was very, very big. It has shrunk in 2018, and in 2030 it is estimated that this will further go down, and these people who were in the band of less than $4,000 per year, they are now shifting to either 4,000 to 8,500 band, or 8,000 to 40,000 of band is likely to grow, and therefore the premiumization theme is going to play out in FMCG sector as the household income goes up. So in my view, I don't think FMCG sector is going to die. In fact, it is going to grow at a reasonable growth. Again, it is not going to be a multi-bagger sort of a sector here, but definitely there is going to be growth, 15%, 16%, whatever the number will be. Again, I'm not giving you any recommendation here, but my point of view is very, very simple, that these blips, when they come out because market is fearful, because the investors are sitting on profit and they're sensing that Q2 has been a weak quarter. So maybe they book the profit at that time and then they might re-enter at later point in time. So hopefully this video has given you perspective of where the FMCG sector is going, what has caused this particular problem right now. And in my view, this seems to be a very, very cyclic view, and these are the good opportunities in my view. Again, do not take this as a recommendation. And if you want to continue to learn practically, you can join my YouTube member community. The feedback of the community has been excellent. Simply go to my channel, press on the join button, or you will find the link in the description or in the pinned comments. With that, I hope you enjoyed this video. If you did, hit the like button. I'll see you in my next video. Until then, keep rocking.